It's Matt Simpson here from Forex.com, and I want to talk about why I think gold is due a bounce, but we also need to urge caution given seasonality and positioning on the futures market. And purely from a technical perspective, I do see evidence of a swing low forming on gold, but ultimately it is flat for the year, so it's really a case of can it hold on to the current support levels. Now looking at the weekly chart, we've got this nice strong uptrend which obviously terminated around January this year. We've had an ABC move lower, but notice how we've got this elongated bullish pin bar on the weekly chart, which briefly traded below 4,400, but otherwise gold has done a pretty good job of holding above 4,400 this year, and that has been a pivotal level of support and resistance since that peak in November. If you zoom in a little bit here, you'll see this small hammer last week, which I think could be a higher low. And the fact that it's held above the 50-week simple moving average, and we've got the bullish divergence, I think we've got a picture emerging where we could be looking for a bit of a bounce. And also notice price action during this decline, a little bit choppy, which to me suggests that bears haven't really driven this move lower. It's simply a retracement of this 4-week bullish rally. Now look at the daily chart, it is a little bit messy. We had this failed rally to 5,000, but ultimately what looks to be a 3-wave correction. Now there's plenty of support levels down here and prices are trying to rise above them. You've got the March daily close low, you've got the 4,400 level mentioned earlier. We've also got this high volume node as well, along with the monthly S1 pivot. So there's plenty of support levels around 4,400, which I think are trying to hold for now. But more importantly, check out this 2-bar day rally. Now this indicator at the bottom is showing the 2-day range from the high to low in percentage terms, and that was the best 2-day range in over 6 weeks. The fact that it happened at a support level to me strongly suggests we've got decent level demand around 4,400. Now I really like that prices are kind of pulling back within that 2-bar range, but as long as prices hold above that swing low or around 4,400, I think dips could be quite tempting to bulls, and they'll be looking to at least take it up to the swing high around 4,630. But a break above there opens up and move to 4,700, and of course we've got the swing highs around the May high, and the monthly arm pivot around 4,800. However, whether we can get there or even continue higher is likely down to what happens with the US dollar. As we see shortly, seasonality is not on its side. So if I look at average returns for gold this century, June tends to generate negative returns. In fact, it's the only month of the year with negative average returns at -0.43%. It's got a median return of -1.5%, and the only other month negative for median returns is March at -0.4%. But also note that June has a low win rate of only 40%, and that means it has closed lower 60% of the time this century. Now seasonality is not a great predictor as such, but it does warrant caution around being overly bullish in a month that generally isn't. And within those bearish months, we've seen a decline of -3.5%, yet bullish months have outperformed in June at 4.2%. So if gold does manage to buck its own seasonal trend, bulls tend to outperform bears in June when gold closes higher. And as for futures traders, they don't seem overly confident in a rally. Net long exposure remains relatively low for large speculators and managed funds overall, with bullish exposure peaking for both sets of traders around late 2025. But also notice how total open interest has nosedived lower. This tells us that market participation in general from all sets of traders has fallen to their lowest level since 2009, and that's hardly screaming a bull market. So I'd be happy with a more aggressive bullish target if I see evidence of bulls actually returning to the table. So in a nutshell, I think the technicals favour a move higher for gold over the near term to 4,700, maybe 4,800. But for gold to stand any chance of reaching or breaking above 5,000, likely requires a much weaker US dollar and gold traders actually returning to the futures market. As always, hope this is useful. Wish you best of luck with your trading.